Hi, this is Jeng with Old Capital, and I got Jakob Andersen here to talk about a new deal. Jacob, thanks for jumping on the call and taking us through this deal. Maybe to give people a little bit of your background, maybe touch on your firm and your background.
Yeah, good morning, James, and thank you for having me on this podcast this morning here. Again, my name is Jakob Andersen. I am a part of the Newmark Multifamily Group here in Dallas. We do between $2.5 to $3 billion the last couple of years here, between 60 to 75 deals annually. The latest one we have is Ventana.
So let's jump into Ventana Valwood, 266 units. Pulled up a map here. So talk about the location and sort of where this deal sits.
Yes, so we are sitting off Josie Lane, which is one of the bigger streets cutting through Farmers Branch. So you're sitting just north of 635 along the 35 corridor and North Tollway. So you basically have four highways around you: 35, 635, North Dallas Tollway, and George Bush Turnpike to the north of you. So you're sitting very centralized in the northern part of the Metroplex and Dallas. And you are about a 5 to 7 minute drive from Madison here.
All right, so we pulled up. So this is just speaking to the jobs sort of in the area, in terms of getting up to either Plano or even getting out to Richardson or Las Colinas. You're pretty much in the middle of all that.
You are. I mean, it's probably one of the places. It doesn't get much better than this here. We did a study, and within 30-minute drive time, you have 2.3 million jobs available. I think one of the important parts of sitting here in the northern part of Dallas, when you go up to some of the areas that are being developed heavily now, the McKinneys, the Friscos, Planos of the world, you don't see this type of vintage product. It's mainly just new product. So you do have a lot of people that works in those areas that cannot afford Class A rents. And where do they go? They will go to areas like the Farmers Branch of the world.
All right, and then let me see if I can. I pulled up a map. Usually I like just dancing around on the map a little bit just to give people an idea of
Yeah.
where you sit. So you sit right here, off of Josie, and then we'll zoom in. So sort of this little pocket right here. And I
Yeah.
mean, we've seen deals trade, along 35, new Class A, along 35 right here, and even up and down Beltline. So you're within, 5-10 minutes of Class A properties along sort of the major thoroughfares, and then you're still close to, Beltline Road and I-35. And we're seeing even some of the older product along 635 get torn down and put up new Class A. So, I think there's going to be less and less of this product to go around. So I think that'll speak to just the amount of rents that you can push and to actually put together a good sized deal. So this is 266 units, and it's sitting at 94% occupancy right now. So maybe I pulled up some pictures of the property. Just talk to sort of what the current seller has done so far on this deal and
Yep.
what's left to do for a new buyer.
Absolutely. So I would characterize that the current owner, they have spent a good amount of capex on the deals. They spent right about $1.7 million. A lot of it has gone to fundamentals. It did have a switch in management before this group came in, shorter term management, which you could see on the property. So what they have focused on is cleaning a lot of stuff up. They have painted the exterior. They have enhanced the parking situation where they put a new parking lot in, put a new mail center. They have a little soccer field in the middle. And then they have also gone into systematically clean up the units. Some of the units, they have been upgraded. It is not a great count. It's about, I believe, 17 or 20 units that they have as upgraded units. Some of them sporadically with granite, some of them, as you can see here, with stainless. It's only a few units with that execution, but it has been as much just clean up the product and deliver a good product. Now, they also have a situation where it is a high volume leasing market. And as soon as someone is moving out, they have people ready to move in. So it has been a question of also turning them relatively quick, which does not always allow you to put in the granite and new appliance sets.
Okay, so right now, 266 units, you're thinking about 20 to 30 of them have been upgraded. And then right now it's all bills paid across the property. And I guess they're running it with about 7 people on the property right now.
That's correct. That's correct.
Okay. All right. And then, so I pulled up the unit mix here. So it looks like about 66% are 2s and 3s. I guess talk through sort of what they've done throughout the property here on the unit mix.
Yes, so they have gone in, and as you can see here, the U's, those are the upgraded units, and the P's, they stand for the partial. And that's to my earlier point, some of them, they haven't been able to go in and allow the time to get stainless steel over black or white appliances. So it's a little bit more of a hodgepodge. I think their main priority has been get good tenants in, make sure people are paying. We have been through COVID that has made it a little tougher to do some of these turns here, but just making sure that the fundamentals at the property they are correct.
Okay, and then I guess this is unique that 25% of the units are three bed units, which I think most of these in the submarket, there's going to be a lot more families in this pocket. I guess talk to the competitive set surrounding you on this deal.
Yeah, so we categorize it into 2 groups. We have the bills excluded, which is typically what we see on most deals. We included 2 there, and this is due to proximity. We have Cooks Creek and Cantera that sits adjacent to the property. And besides that, we went to hold it up against other all bills paid assets. So we are looking at other deals in Carrollton, in Farmers Branch, and in North Dallas. When we look at the gap and why this is typically it's a popular model, people like to just pay this one check. There's not a lot of deals left in the Metroplex that are all bills paid. You can assign probably about 25 cents to sometimes 30 cents of difference per foot in the rent. So when you're holding up your neighbors, yes, they're sitting at $1.30 on their effective rents versus $1.40. If you're actually holding up what people are paying, you are getting a better deal right now at Ventana because the utilities are included. And as you can see, we have a number 7, for example, Villa Creek, that also sits in Farmers Branch right down the street. Their rents are right around $1,500, where Ventana is sitting at $1,200. The same can be said about North Haven Terrace. They are starting to push actually up towards $1,500 for the 2 bedrooms. So relative speaking, in comparison to the comp set, Ventana is an affordable solution.
Right. And then, I mean, another thing I'm looking at on these rent comps is, pretty much the occupancy is like 95 to 100% on all these deals. So my guess is that all these guys are going to start pushing or can push, right? Like if you only have 1 or 2 units available, then that allows you to sit for a little bit and push the rents. And so right now there's probably about $150 gap on the all bills paid model between the rent comps and the subject. But then once these guys start pushing, I think that gap will increase. And so so we talked about probably about 30 of the units have been upgraded. What do you think the new buyer coming in? I know, so this is an example picture. This is not the actual unit, but what you could actually come in and do, and sort of where you think you can take rents from there.
Yeah, so what we're looking at, there's actually 2 things you can do here on the actual rents. Number 1 is you go in and you enhance the units. And what we have laid out here is a fairly typical layout of granite countertops. You're going to put some new fixtures and plumbing and electrical in there. a new stainless steel appliance package, cabinet fronts, put some new ones on, and then also put an undermount sink with the new granite countertops. We're looking at running it around that $5,200 for a package like that, and get another $150. The other part that's available, and they have just started to exercise, is you do have these a healthy amount of 3 bedrooms. They have actually started to convert the 3 bedrooms into a 2 bedroom and a 1 bedroom. There are currently 15 units that lays well for that execution. From the sample size we have, that will cost you about $7,500 to do. And the delta in the rents between that 1 and the 2 versus the 3 is about $325. So this is a concept they have just started. Ventana used to be 265 units. Now it is 266 due to this.
All right. So start converting them backwards a little bit. And yeah, because I mean, if you go back to the rents, the 1 bedrooms are sitting at about 1,000. And then your 2 bedrooms, 12 to 1,300. So you're looking at $2,400 in rent compared to 1,500 to 1,600 on the rent. Okay. And then, all right, looking at the pro forma, obviously you have the value add because of the increase in upgrades. Anything else on the pro forma people should be taking a look at?
Yeah, I think the main thing here is, and I think in our business, we do talk about value creation a lot, and that is important and it's very effective. And we have a lot of really good units now due to people's engagement into the value add space. Now, this deal here, when you're looking at it in comparison to a lot of the stuff, basically all deals I've been underwriting, this is on the trailing 12, the trailing 6, the trailing 3, and especially the trailing 1. It's an above market cap rate deal. So when you're actually looking at your income and your expenses on the actual numbers, you are looking at a deal that's sitting on the T12 in about a 4.3, 4.4, and it's even now for the T1 growing to a +5 cap. And that is not something we have seen in a long time.
All right. And then here, hold on one second. Sorry to get some water. So in terms of whisper price, what are you guys whispering on this deal?
So our whisper price is mid 37 million, and as you have it here, 37.5. And that those cap rates I just referenced, that is rotated around that number.
Okay. All right. So, we've looked at it, most deals right now, they used to size at like, let's say 50 to 55. Most deals that we're seeing in the market are sizing to like 45 to maybe 50. So this one's closer up to 55, 60% LTV on Fannie and Freddie. If you need a little bit more leverage, the bridge lenders are definitely in play here, as typically the minimum is 20 million. So we're north of that. So you're, whether you do 70, 75% loan to cost, you're probably in the high 3s, low 4s on your bridge loans in today's market. And so I'd probably underwrite a couple more increases in your interest rate, just with the Fed moving their rates up just this past in March. And then, as you forecast going forward, probably a couple more increases on your bridge loans if you do a floating rate deal. So, Jacob, have you guys set a call for offers date yet on this deal?
We have not set that yet. We expect it to we will be touring here for another 3 weeks or so, and then we will have the date. So it would be around mid-April when we would have that offer date.
Okay. All right. Any final comments before we wrap up here?
I would say if you got the time and you're done with your spring break, come out, schedule a tour, and let's take a look at the actual asset.
All right. Thanks a lot, Jacob.
Absolutely. Thanks for having me.